All right, so you want to know if Devon Energy is a buy right now? It's a company that seems to be doing pretty well. They're one of the biggest onshore oil and gas producers in the U.S.
Yeah.
Financially, they seem solid, and they've got a ton of potential with all that drilling.
Yeah, tons.
But we're not going to just skim the surface here.
Yeah.
We're going deep today.
Okay.
Using this Motley Fool analysis as our guide.
Sounds good.
So
it's a good one.
Yeah.
It really digs into like all the complexities of where Devon is right now,
right.
especially how closely their performance is tied to the oil and gas market.
Right. Which, as we all know, can be
unpredictable.
Yeah, a little unpredictable.
Totally.
So that's why we're doing this deep dive.
Yeah.
To really get into it.
Awesome.
So let's start with what the Motley Fool calls the bull case.
Okay.
What makes people excited about buying Devon?
Well, they highlight the financials. First of all, they say that they're rock solid.
Okay.
They've got this investment grade balance sheet. Which basically means they're low risk for lenders.
I got it.
Their break-even costs are also super low.
Wow.
Like around $40 a barrel.
So even if oil prices dip,
exactly,
they can still make a profit.
They're still in the green.
That's pretty impressive.
It is.
Not just surviving, but like thriving even when things get rough.
Exactly.
And they're not just like sitting on their assets either.
No, they're not.
They're expanding.
They are.
They made a big acquisition.
Huge acquisition.
Of U.S. assets at the end of 2024.
Yep.
That's really interesting. A lot of companies are like...
pulling back.
Yeah, they're pulling back. And Devon's out there like making moves.
It makes you wonder what they're thinking, you know?
What's the end game?
Some analysts think that they're trying to be a big industry consolidator.
Interesting.
So like, well, the giants, ExxonMobil, Chevron, are focusing on those huge global projects.
Yeah.
Devon can kind of swoop in and take those smaller assets that are still valuable.
Oh, so like the ones that might get overlooked.
Exxon and Chevron don't even care about.
Exactly.
Got it.
Smart strategy, right?
It's a clever strategy.
Yeah.
It's like finding those hidden gems in the stock market.
Totally.
But what about the other side of the coin?
Right.
Why would someone want to sell Devon?
Yeah, good point. There are always two sides to every story.
Right.
And in this case, the bear case really comes down to how volatile the oil and gas market is.
That's fair.
Their success is like directly tied to the price of oil and gas.
Right.
And we all know those prices.
They can swing wildly.
Yeah, they're all over the place.
It's like putting all your eggs in one basket.
Uh-huh.
But the basket is on a roller coaster.
Mm-hmm. That's a good way to put it.
You know, I like that.
And that's where those big companies like ExxonMobil and Chevron, they have an advantage, right?
They do.
They've got more.
Way more diversified.
Yeah, they're diversified.
Yeah.
So they're not just producing oil and gas.
Right. They do pipelines, refining, even some alternative energy sources.
Oh, wow. So they've really got...
They're spread out.
Yeah, their fingers in a lot of pies.
Exactly.
And that helps them when oil prices take a hit.
It does. It cushions the blow, for sure.
So for someone who doesn't like a lot of risk...
Right.
Maybe Devon's not the best investment.
Maybe not.
But let's not forget about those investors that are in it for the long haul.
The long game.
Yeah.
Absolutely.
What does the Motley Fool analysis say about that?
Well, if you look at their recent acquisitions, it's clear that they're not just stockpiling assets.
Mm-hmm.
They're really strategically positioning themselves for long-term growth.
Got it.
And they're focusing on maximizing their returns from key shale plays.
So even if there are short-term dips in oil prices, their acquisitions should pay off over time.
That's the idea.
Right.
Long-term, those assets will appreciate in value.
Okay.
Makes sense.
Right. That makes sense.
And here's another interesting thing.
Okay.
Downturns in the industry could actually be buying opportunities for them.
Oh, how so?
So when those smaller companies struggle with volatile prices, Devon can swoop in.
All their money.
Exactly.
They can buy up assets at a discount.
Yeah, basically.
Wow.
And they can further consolidate their position in the market.
So they're turning market volatility into a strategic advantage.
Pretty much.
That's fascinating.
Yeah.
It's almost like a judo move.
Uh-huh. I like that.
You know, using their opponent's strength against them.
It is a bit like that.
Yeah. And historically speaking,
well, yeah,
oil prices always recover eventually.
They always do.
We saw it during the pandemic.
Yeah. Huge shock to the system.
Yeah.
Prices plummeted.
Yeah.
But they bounced back.
They came back.
They always do.
So Devon's leadership is betting.
They are.
That the same pattern will hold true in the future.
Yep. That's the bet.
Okay. So we've got this picture of a company that's financially sound. They're aggressively pursuing growth.
Yeah.
They're seemingly turning market volatility to their advantage.
To their benefit.
Is that enough to make it a hold for our listener, though?
Well, to answer that, we need to dig a little deeper.
Okay.
The Motley Fool analysis has some really great metrics that can help us figure that out.
All right.
For example, they point out that Devon's free cash flow has been really strong.
And free cash flow, that's...
That cash flow that's left over.
Okay.
After all the essential operating expenses.
Got it. And why is that so important?
Well, it shows a company's ability to reinvest in its business, pay dividends, or even buy back its own stock.
Okay.
All of which can lead to long-term shareholder value.
Right. So it's a good sign.
It is a good sign.
And in Devon's case?
In Devon's case.
What are they doing with that free cash flow?
Well, they've been using a good chunk of it.
Okay.
To increase their dividend payout.
Which can be attractive.
Very attractive.
To long-term investors.
Especially for those looking for income.
Right.
Yeah.
So we've got financial strength, aggressive growth, a commitment to rewarding shareholders. But I'm guessing there's still more to this story.
There is. We need to look at their debt-to-equity ratio.
Okay.
This basically tells us how much debt a company is using to finance its assets compared to the value of its equity.
Okay.
And a high debt-to-equity ratio can be a red flag.
Right. Makes sense.
But in Devon's case, what's fascinating is that it's actually pretty healthy.
Okay.
Especially when you compare it to other companies in the industry.
Oh, so they're not...
No, they're not overloaded with debt.
That's good.
It suggests that they've been using debt strategically to fuel their growth, but without taking on too much risk.
So they're being smart about it.
Yeah, they seem to be.
Okay, but is there anything in the analysis that gives you pause?
Well, one thing they do mention is that Devon's growth strategy relies heavily on acquisitions.
Okay.
Which can be effective.
Right.
But it also means they need to keep finding and buying valuable assets at a good price.
Which can be tough.
It can be really challenging in a competitive market.
Yeah, that's a lot of pressure.
It is.
To keep finding those deals.
Yeah, and it's not just about finding the right assets.
Right.
It's also about integrating them smoothly into their current operations.
So it's like...
It can get complicated.
Yeah, it's got to be more than just buying it.
Exactly.
You got to know what to do with it.
And if it's not done well...
Yeah.
It can lead to inefficiencies and even financial losses.
It's like putting together a giant puzzle. Except the pieces keep changing shape.
That's a great way to put it.
Right.
But, to be fair, Devon has a pretty good track record with acquisitions.
So they've done this before.
They have. They've shown they can identify undervalued assets and integrate them effectively.
Okay, so that gives some reassurance to long-term investors.
Right, it's not a guarantee.
Right.
But they've done it before.
But their past performance suggests they kind of know what they're doing?
Yeah, they seem to know what they're doing.
And this is where it gets interesting.
Okay.
The Motley Fool analysis goes beyond just the numbers.
They look at the management team, too.
Oh, okay.
Which is super important.
Yeah, absolutely.
Especially in an industry like oil and gas.
Right, because the leadership can...
They can make or break a company.
Yeah, for sure.
And in Devon's case, they highlight their experienced and disciplined management team.
All right.
They've been through multiple industry cycles.
Wow.
They've made strategic acquisitions, and they've consistently focused on creating value for shareholders.
So they've got a pretty solid track record.
Yeah, a really solid track record.
Okay, so it sounds like Devon's got a lot going for it.
It does.
Financially, they're in a strong position. They've got a solid growth strategy and a capable leadership team. But all of that depends on oil and gas prices.
Right.
Which are unpredictable.
Exactly. No one can predict where those prices are headed.
No crystal ball.
Nope.
But the Motley Fool analysis, they acknowledge this uncertainty.
They do.
But they emphasize that Devon is well-positioned.
Very well-positioned.
To weather any storms.
To handle whatever comes their way.
And how so?
Oh, remember those low break-even costs we talked about?
Yes, I do.
That gives them a big advantage when oil prices are low.
Right, because they can still make a profit.
Exactly.
While other companies are struggling.
Yeah, some of their competitors might even go under.
So it's like they've built a fortress.
I like that. That can withstand a siege.
Yeah, they're prepared.
Right.
They're not immune to market fluctuations.
Right.
But they're ready for them.
And that's key for any long-term investment.
Absolutely.
So after all this, this deep dive into the Motley Fool analysis, what's the most compelling argument for holding Devon?
I'd say if you're looking for a company that can handle market volatility with a solid financial foundation, a clear growth strategy, and a strong leadership team, Devon is worth considering. But if you're really risk-averse and you're not comfortable with the ups and downs of the oil and gas market, it might not be the best fit for you.
So it really depends on the individual investor.
Exactly. Their goals and their risk tolerance.
Right.
And that's why this kind of research and analysis is so important.
Yeah, it helps you make an informed decision.
It does. It helps you understand the company.
And make a decision that aligns with your personal circumstances.
All right, so we've covered a lot of ground here.
We have.
We looked at the bull case, the bear case, the hold perspective, all through this motley fool analysis.
Yeah, it's a great analysis.
We've seen Devon's strengths and weaknesses.
We have.
And we've talked about the risks and rewards of investing in oil and gas.
It's a complex industry.
It is.
But there's one more thing.
Okay, what's that?
We haven't really talked about the changing energy landscape.
Oh, right.
And how that might impact Devon in the long term.
Yeah, that's important.
The world is moving towards renewable energy.
It is.
And while oil and gas will still be around for a while, it's important to think about how companies like Devon are adapting to this transition.
So it's not just about next quarter or next year.
No.
It's about the future.
It's about the long game.
Yeah, how are they positioning themselves?
Exactly.
And that's where the hold perspective gets really interesting.
It does.
Because holding a stock isn't just about waiting for it to go up in value.
No, it's about being an active investor. It's about engaging with the company.
Got it.
Monitoring their progress. And asking tough questions.
Like what kind of questions?
Like how are they investing in renewable energy?
Okay.
Are they diversifying their portfolio? Are they doing anything to reduce their environmental impact?
Right. So it's about more than just the bottom line.
Exactly.
It's about their values.
And their vision for the future.
So for our listener, this deep dive into Devon Energy is just the start.
In the beginning of the journey.
Yeah, it's a conversation starter.
It is.
It's given you some insights.
Hopefully some valuable insights.
And hopefully it's giving you the knowledge to make an informed decision.
That's the goal.
But remember,
what's that?
The energy landscape is constantly changing.
And what's changing?
New technologies are popping up. Consumer demand is shifting. And all these geopolitical forces are...
Yeah, they're reshaping the industry.
It's a lot to keep track of.
It is. It's a dynamic market.
It is.
And staying informed is key.
So keep learning.
Yeah.
Keep asking questions.
Absolutely.
And keep digging deeper.
Keep exploring.
Now, before we go,
I
wanted to circle back to something we talked about earlier.
Yeah.
Devon's commitment to giving back to shareholders through dividends.
Oh, yeah. The Motley Fool analysis really highlighted that.
Yeah, they said their dividend yield is one of the highest in the industry.
That's very impressive.
Which can be really attractive.
Especially
to income-focused investors.
Yeah, if you're looking for income, that's a big plus.
But it's important to remember that those dividends aren't guaranteed.
Right. They're not set in stone.
They can be reduced or even eliminated.
Yeah, if the company's financials take a hit.
So while a high dividend yield is great,
it is enticing.
It's important to look at the whole picture.
Exactly. The company's overall financial health.
Yeah.
And their long-term sustainability.
So don't get tunnel vision.
Don't just focus on one metric.
Right.
Look at the big picture.
And that's where metrics like free cash flow and debt-to-equity ratio are helpful.
They give you a better understanding of the company's financial strength.
Right.
And their ability to keep paying those dividends.
So it's all about looking at the bigger picture.
Absolutely.
And that's why I think engaging with companies like Devon is so important.
I agree.
Asking those tough questions about their long-term strategy, their commitment to sustainability.
It's about holding them accountable.
Because as investors, we have a responsibility.
We do.
To make sure they're doing right by their shareholders and the planet.
It's about using our investments to make a difference.
It's about aligning our investments with our values.
Yeah.
And using our financial power to drive positive change. Because investing isn't just about making money.
It's not.
It's about creating a better future.
For everyone.
That's a great message to end on.
I think so too.
Investing is about so much more than just numbers on a spreadsheet.
It really is.
And that's especially true for a company like Devon, which operates in an industry that has such a huge impact on the world.
A profound impact.
It's not just about their profits.
No.
It's about their role in the energy transition, their environmental stewardship, and their commitment to a sustainable future.
All those things matter.
And investors are starting to pay attention.
They are.
They're asking questions.
More and more.
About a company's ESG practices.
Yeah, environmental, social, and governance.
Right, so it's not enough
to
just be profitable anymore.
No, you have to be responsible, too.
Companies need to be responsible.
That's a good thing.
Yeah, it's a positive trend.
It shows that investors are realizing they have the power to influence companies.
To make them do better.
Exactly.
So as we wrap up this deep dive on Devon Energy, I want to leave our listener with a few key takeaways.
Right.
First, Devon is financially solid. They've got a good track record.
Yeah, of growth and shareholder returns.
They have a clear strategy for dealing with the volatility of the oil and gas market.
That's key.
And they're led by a strong team.
An experienced team.
But it's not a sure thing.
No, it's not.
Their success depends on things they can't control.
Right, like oil prices.
Yeah, and the energy transition.
Exactly.
So do your own research.
Always a good idea.
Know your risk tolerance and consider the whole picture.
The big picture.
Not just the financials.
Right, think about the company's long-term vision and their commitment to sustainability.
We hope this deep dive has given you a good understanding.
A good starting point.
Of Devon Energy and its place in the energy world.
In the ever-changing energy landscape.
But this is just the beginning.
It is.
Keep learning.
Keep exploring. Keep asking those tough questions.
And keep digging deeper.
The more you know, the better equipped you'll be.
Absolutely.
To make smart investment decisions.
That benefit you.
And the world around you.
Exactly.
Yeah, it's about more than just the numbers.
It really is. And I think that's especially important.
Yeah.
When we talk about a company like Devon, you know, they're in an industry that has a huge impact on our world.
It's not just about their financial performance. It's also about their role in the energy transition. You know, are they good stewards of the environment? Are they committed to a sustainable future?
Exactly. All those things matter.
And it seems like investors are starting to pay attention.
They are. They're asking tough questions.
Yeah. They're not just looking at the bottom line anymore.
No, they're looking at a company's ESG practices.
Environmental, social, and governance.
So it's not enough to just be profitable.
Nope. You got to be responsible, too.
Which is a good thing.
It is. It's a positive trend.
It shows that investors are realizing that they have the power to influence corporate behavior.
They can push companies to do better.
So as we wrap up this deep dive into Devon Energy, I want to leave our listener with a few key takeaways.
Sounds good.
First, Devon is a financially sound company. They've got a good track record of growth.
Yeah, and shareholder returns.
They've got a clear strategy for navigating that volatile oil and gas market.
Yep, which is really important.
And they've got a strong leadership team.
An experienced team.
But it's not a guaranteed win.
No investment is.
Their success depends on things they can't control.
Like what?
Like oil prices.
Right.
And the pace of the energy transition.
Exactly.
So do your own research.
Always a good idea.
Know your own risk tolerance. And consider the big picture.
The whole picture.
Not just the financials.
Right. Think about their long-term vision.
Yeah.
And their commitment to sustainability.
We hope this deep dive has given you a good understanding.
A good foundation.
Of Devon Energy and its place in this crazy energy world.
A complex landscape.
It is, but this is just the beginning.
It is.
Keep learning, keep asking questions.
And keep digging deeper.
The more you know,
the
better you'll be at making those investment decisions.
That benefit you and the world around you.
Well said.
Thanks.
That's all the time we have for today.
Okay.
But we'll be back next week.
Looking forward to it.
With another deep dive into the world of investing.
Sounds great.
Until then, keep learning and keep investing.
See you next time.